Hello, Michael Hopkins, Seeking Alpha. I'm here again with Jennifer Warren with Concept Elemental. You've been busy, been very busy.
Hmm.
You've been to a number of events connected to the energy world, including investors and calls. So, how about just a real download, quick recap of the things that you've been doing?
Sure. So yes, in the last week it started, where are we? Friday. It started last Wednesday night, week before. And I attended EarthX E-Capital Summit. Now, EarthX in Dallas is like one of the biggest conferences in the world on everything sustainability related. It's huge. I mean, there's a conference on conservation, energy, forest farms and ranches, everything in between. And the one I went to specifically is the E-Capital Summit. And so that is where capital allocators, investment funds, and projects, innovative firms connect. And so this is a lot of firms that aren't public yet, that one day may be public. So it's kind of the tip of the spear, about energy transition type firms, clean tech firms, all stripes, all areas, whether it's ag, clean tech, oil and gas, you name it, it's all there. It's the whole spectrum, circular economy, everything. And then that very same day, I had to jaunt up to Plano to Toyota's headquarters. I know this all sounds insane. That was an insane day. To Toyota's headquarters, because I don't know if you'd call it a soft launch, but they were launching their Toyota and Chevron were launching their renewable gasoline product, and which there's a lot to that, and we could spend a full day on all that, but we won't do that. And because I'm just starting to work all that down, and I've got some slides on sort of what that's about. And then lastly, I was at a symposium Wednesday, and it was E&P firms, oil and gas, a lot of talk about CCS and hydrogen. Now, what was interesting about this was it's the industry. It was the energy industry. No investment firms. So it was, what are they doing? How are they approaching the transition? What is this going to look like? Very much a lot of talk about CCS and hydrogen. The Port of Corpus Christi, the number 2 person was there. That port is the number 1 crude oil gateway for the United States. They export 2.3 million barrels a day from there. They have the capacity of 3 million barrels. They're the number 2 LNG exporter in the port in the United States. And we know, how important LNG is going to be in the world. It is now, and it will be for a very long time. And I'm trying to think if there was really anything high level on the E-Capital Summit. That's just kind of a work in progress, but what it points to, though, is just this will and attention on sustainability, that whatever your politics, whatever you think, doesn't matter because this energy transition is happening, and these various generations are all making great strides at coming up with better ways to do things, how to reduce carbon emissions, how to create products more sustainably, all through the value chain, all through the supply chains, and so it's a multi-generational effort if you think about it, so that was interesting. And I also met somebody that was actually on the board of NASDAQ, and he was this amazing, brilliant mind that also was a father of like the Jobs Act. So super deep knowledge from some of the people there. You know, just a lot. Also, and also something else too that was noted in this. There was a publicly traded firm there that represented a large firm that does waste recycling. It wasn't waste management, but it was that kind of thing. And this CEO was talking about that, you know, a lot of these new ideas and new models, a lot of it's going to come from the center of the United States, where this re-industrialization is happening, this sort of renaissance, if you will. And so that's really interesting. And I talked last time, I don't remember if it was on the Fang to Fang one or what, but just that, you know, we're going to be doing a lot of recycling, you know, and so there's a lot of opportunities, battery recycling, waste recycling, you know, and so it's all very interesting. Now back to I think we can look at some slides for this, some of this Toyota discussion, and then the E&P. So let me just screen share. Get rid of that. Okay, so you have it here. Are we good? And I need to reposition it a little bit because it's kind of weird. Oops. Okay. So just to start, so we'll start with the Toyota stuff because this is the first slide. So this was actually from a presentation of the chief scientist, one of the chiefs, I think he is the chief scientist at Toyota. Now, this was from a Davos World Economic Forum presentation that he gave. And I actually met him last week, and I talked to him for probably 10 or 15 minutes. And wow, really some interesting, edgy, some just high-minded thinking, just brilliant. Anyway, so they were talking about, and this is not just Toyota. Scientists and the geologists at this conference Wednesday in the fossil fuel, you know, arena, also, they all talk about this. This is like commonly known amongst the scientists and the geologists and the think tankers. Colorado School of Mines has been saying it. Everywhere I go, this is what is said. Basically, we're going to have a lithium deficit. And so the deficit by 2040 is 18. Now, I'm going to butcher the name of this because it's an Australian mine. Pilgangooras, 18 Pilgangooras. Now, that project, it's in development, and it's one of the biggest lithium mines in the world. Okay, so, and here's the other fun fact about mining. It takes roughly 16 years to bring a new mine online. Call it 10 to 15. I said this before, I think 2 videos ago. Oh yeah, I said it in the Fang to Fang video, you know, because I had just been with the battery recycling innovator, you know, the metals, you know, the one that's going to plonk down next to a gigafactory and recycle those batteries. So that is one issue, and that ties back into that EPA announcement, and we can get to that after the slides if you'd like. So lithium deficit, yes, other types of tech are being worked on with batteries. Sure, that's going to happen too. Other types of batteries. Now, this is more specific to some of Toyota's presentation. Okay, Toyota is not going to stop making BEVs, straight up plug-in electric vehicles. They're going to make those. But here's the deal. So one BEV, you know, this is looking at it from a fleet point of view of how it moves the needle on reducing carbon emissions. So this is what happens with one, if you sink your money into one BEV. Okay, I'm just going to go through these fast because this is not something I talk about commonly, and I don't want to I don't want to do injustice to having not thoroughly thought this out. This is what happens with the one that it's the, oh, I forget the name of it, but it's the one in between. It's a battery electric hybrid. And so if you make those, you know, over here on the right, you can see how it moves the needle on the fleet average. Because, you know, we have a bunch of cars in the United States, like, I don't know if it's 260 million or something like that. So that's a lot of cars. Now, this is what happens if you go to a hybrid, which uses gasoline. It's got some lithium batteries in it. But look how it moves the needle on carbon emissions. So that's kind of what the issue is that you know, there's different paths to reducing carbon emissions. And at present, just straight up plug-in hybrids, not ready for prime time, given the minerals scarcity issue and the grid issues. The grid wouldn't be able to handle all the BEVs that you would need to plug in. There's not the charging stations. There's not the transmission lines to also have renewable power that you plug in to the hybrids. It's not all there. So if you have a battery electric vehicle and you're plugging into a dirty grid, you know, you're not saving that much really. So it's all going to take time. And that is really the message I've received over time, listening to, you know, think tanks and scientists and, you know, firms that are in the trenches doing this, that, you know, this is going to go slower. It doesn't mean we're not doing it. You know, we're going to make more battery electric vehicles. Toyota themselves, their plan is, I think, 1.5 million plug-in, you know, BEVs by like in a few years, and then 2.5 million per year in 2030. That's not as much as you would think. Now add in all the other car makers, you know, and so the penetration of EVs, you know, may not be as high, and there's going to have to be other types of hybrid versions of all this, and hybrids that use gasoline, and that's what Toyota has you know, I saw the car, they did a road trip with it. It was really cool. I want one. You know, and so what they're going to do is have this renewable gasoline, and it has a, you know, a feedstock that's can be an ag product like soy, could be cooking oil, could be things that are, you know, recycled, frontier stuff. They're launching this, and it will be in filling stations in California, I think, by the end of this year. Don't quote me on the timeline, because I wasn't able to, again, just absorb all that just yet. But so it's going to be a slow rollout, you know. And then this is back to the concept I've been talking about before. You know, I talked about this in December, just saying that sustainable fuels make sense, you know. Well, fast forward to where we are today, what, 6 months later, now you're seeing announcements, now you're seeing more analysis of what that looks like. Now you're seeing firms actually doing things like Chevron, you know, in the sustainable fuel area, Exxon as well, others, yes, gonna keep happening. Now, a lot of this sustainable fuel effort has been in heavy emitter groups, like heavy duty transportation, aviation, heavy emitter groups. But with the Toyota announcement, now these sustainable fuels are going to be moving into the light duty vehicle area, consumers. So it's another layering on of the decarbonization effort, slowing down carbon emissions, emitting less. And again, I talked about this before, we're leading the pack. We're one of the most advanced economies, Europe as well. This is aviation here. Now, it's because we have a lot of the travel, we have an insane amount of air travel in the United States to everywhere, and the infrastructure for all that, and the activity, people coming to America, us going all over the world, this is representative of that. And then I want to just kind of pivot over really quickly to some of the learnings a little bit at the conference. It was by the Texas Energy Council. And I've been to their conferences in the past. I sort of dropped off their list the last couple of years. Not by design, it just happened, but I got re-invited, sort of kind of happened accidentally. And, but this is just kind of showing you the attention on CCS, carbon capture and sequestration, taking the carbon out of the production process of producing oil and gas, from heavy emitters, from the industries emitting. It's a path. I can't remember how much it moves the needle. I think it moves the needle like CCS, like maybe moves the needle like reducing total carbon emissions from the whole budget, like I think 10% or something like that. And that doesn't sound like a lot, but it is. And it's going to take an all of the above approach to the energy transition. There is no one path, and it is not full-blown electrification. By the time that were ever to happen, we would have some other technologies taking over that, whether it's fusion or whatever. So I mean, it's hard to imagine all that. But this is this is just showing some of the ways in which carbon can be stored in saline formations. And I met somebody that's working on that. Number 3 here is enhanced oil recovery. This, just showing how it goes in. And that was talked about. I talked about that before some, I think at the beginning of the year with Scott Sheffield discussing, we're going to be doing a lot of enhanced oil recovery in the future with the Permian. And we have all that capacity here, and we have the competencies with the firms. Schlumberger was at this conference, and I didn't get to stay for their presentation, but they're working on the tech. And I'd mentioned that last time, that I thought that the oil field services firms are in a very interesting sweet spot with the tech that's going to be required to decarbonize further fossil fuel production. So now this is for you, Michael, because I know you like maps.
Thank you.
You're welcome.
It must be what's Gulf Coast. It must be Corpus Christi area.
Yes. So this is a kind of a close up. God, I can't get this. Hang on, let me see if I can get this a little bigger. Oops. So yeah, so this is just kind of this is, again, the Port of Corpus Christi was there at this conference. And they are also still updating this port. They're going to be able to handle more of the extremely large LNG vessels in the future. Right now, as I mentioned, they're the number 2 exporter of LNG in the United States. And, Cheniere is connected to all that whole, group. So they would be connected to this port. But there were a lot of firms. It was amazing the number of firms invested in this port and the workings around it, because that means it's in a logistics hub too. So it's oil and gas and everything that comes into that port, but all the logistics that expand out from that. It's really fascinating, and they're super environmentally focused. I don't have the vernacular to talk about this properly, but what I understood was that the water in that port, they have to keep it really clean, because the water from that port goes into like a dolphin exhibition. It has to be clean enough for a dolphin, you know. So that's pretty cool. And then this next one is oops, I have to reduce it to get to the arrow. Okay, so now this is a bigger, wider angle view of Texas and the ports. This is current traffic. I just took this morning. This is all the activity that's going on the Gulf Coast. And I had mentioned this before. And so this kind of visually represents all the activity. And you can see here, this is Lake Charles right here. That is where Energy Transfer's Lake Charles LNG facility is. I haven't looked it up lately, but I know that they were at the FID point. So that means very soon they will be exporting, and they have all the pipelines connected to that. Really, really good spot. So, you know, it's just a lot of activity. And then lastly, I just wanted to quickly look at these, just, you know, for this kind of investment thought. I just wanted to show, oops, try to get this right. Okay, so this is QClean is this here, almost down. This is 1 month, and S&P 4%, iClean just under 1%. Now, QClean is kind of representative of this NASDAQ clean tech index, but they have weightings a certain way that throw that index differently than iClean. I always end up talking about iClean. Interestingly, they've done better. XLE, as we know, the you know, E&P, U.S. oil and production, CVX, and we know that CVX had earnings announcements with Exxon and did quite well, as was expected. And then GMET is actually a metals ETF. And so as you can see, that kind of bumps up a little more. You know, CVX has kind of been pretty steady, roughly, you know, 5% over the last month. XLE same, S&P 4%. Now this is kind of interesting, this next chart. So this is a month. Now this is the year, and same thing. QClean down 20%, S&P 9%, iClean 1%. So those clean tech indexes, you know, have not done as well. And then XLE down 5% because, you know, oil prices were down, but then as we know, OPEC put a floor under it not too long ago. And then you also have the dynamic of, you know, recession. You know, we've been talking about a recession for a year, you know, and that's still kind of, you know, in the consciousness, and we don't really know where that's headed exactly, but that we know that the effect of higher interest rates is having an effect of cooling things, trying to cool inflation, which has to happen anyway. I just bought some butter yesterday. I was like, dang, that went up 50 cents. Yeah. It's like, okay, that's real. My butter. And then GMET down just under 1%, you know, the minerals, all the critical minerals. But funny, well, actually, it's not just critical minerals. GMET has a lot of all the mining stocks in it. And so I will stop sharing. Okay.
There you go.
So yeah, so that was kind of my world, you know, the last week.
Yeah. So yeah, let's go back. I mean, you've done, you know, the events, the places, the visits that you made. Was there something that stood out that you learned about the energy world and energy markets? Is there key takeaways? Something that kind of surfaced as something that you hadn't thought about before?
Well, one thing, I think it solidified the idea that it's going to require a lot of diverse solutions. I think what I learned is more timelines. that the timelines, intuitively I've felt, oh yes, this is going to take longer, and the physics and the economics of what the ambition is. Let's just use net zero as the ambition proxy. Okay. So with that as the ambition proxy, and this is something actually one of the scientist fellows said Wednesday, there will be pockets of places and cities and countries and firms that can meet a net zero goal. And they will do it, and so if net zero is one of your investment drivers, that exists. Yep. And you can figure out portfolios, to do that. And then there's the whole macro environment, the reality of the whole, net zero is a concept, but not everybody ascribes to net zero. People are not planning their budgets about net zero, right? Maybe firms are, but people where we live, we're just like, oh, I'm making this much money and I gotta, spend this much on food, and, this goes into my tank, and, all that. So there's that macro lens too. And I think this gets to the Toyota as a proxy for reality issue. And that is that not everybody lives in a battery electric vehicle world. Not everybody has the capacity to plug it into their garage, to definitely not to access pure renewable clean energy. That's not happening per se right now. The charging stations, those are not there yet either. That is not ready for prime time. The access to the charging stations aren't there. And to put all those charging stations, what that will require, it's a lot of money. And I know I saw this figure of at least $500 million going to Texas for charging stations. And I think it might have been that infrastructure bill, the one before the IRA. Okay, you can spend that money and plonk down all those charging stations all over the state. Is it the most efficient path? It's back to that fleet idea. Are you going to put all those charging stations for that one BEV and move the needle that much and spend all that money? The economics and the physics of that just don't work. And so my concern, as I've said before, is the waste. We've got to think this through better. And I think that's what Toyota is trying to do, and Chevron, is offer up another solution that meets people where they are, that meets people where they live. People buy their cars and they keep them longer, and they have tanks, and so that's a solution. And if you want to put renewable gasoline in your tank, it's going to cost you more. That was something that was said with the Chevron executive, when he was asked by this FT editor that was they also had an hour-long event that I listened in on Wednesday. That gasoline will cost more, and people that want that will pay more for it. Not everybody can do that. Again, it's about meeting people where they are, and moving the needle, on carbon emissions. And so I think the aperture has to be widened, about this. And that gets back to that EPA announcement that we were talking about earlier before the call. There was the announcement that, they're going to try to mandate, new emissions from vehicles, that, they're expecting EVs to make up 60% of the fleet in 2030. This will get us there. No, it's not going to happen like that. It's the physics and the economics don't work. They say that, what was it? Oh, it will save trillions of dollars in health and fuel. Well, it will tank the economy if you do if you push it that hard like that. So it defies economics and physics, and that's all I have to say about that. Now it throws out the playbooks on some things, right? People that were like, I am just gonna guns ablaze and I'm investing in charging stations, I'm doing this, I'm doing that, this is minerals, I'm all the way, I'm all in. Okay, well, you know what, I'm not. I have a little bit of that, but I'm trying to be really careful about what I select. And not that there's not some market share. Absolutely. There's going to be market share. It's going to happen. It's just slower, and there's just more diverse approaches that are going to happen. So you have to be more diligent and prudent, I think, with your investment thesis and where you really put money, because you need to earn a return at the end of the day. Did I answer your question?
But I think it goes into the next one. If there's like a particular investment theme or a refinement of the existing ones, it almost feels like, to me, it's like this bridge from one idea to the next, or it just evolves over time. Especially when we look at things like if we have to refine what our expectations are in terms of these types of investments.
Yeah, the time scales matter. And this was something that the scientists talked about. And this is kind of this is a difficult concept to wrap your head around, but this isn't a linear transition, right? We're not going from a fossil fuel world to an electric world. It's not linear like that. As we saw from some of those scenarios from Bloomberg, there's these CCS paths, there's some nuclear, there's some renewables, there's some, throw in some hydrogen. Oh, before I forget, hydrogen hubs, those stand on their own economically without the IRA legislation. So I think that's an important point. So those are going to be economic and happen even without the IRA legislation. And the IRA legislation incentivizes a lot of extra things related to hydrogen. That was discussed as well. But so the time scales. So if we are going to have the numbers I heard about the headwinds of the minerals, electrification, charging station issue, nexus of headwinds, 10 to 15 years. Okay. Now, if you lay that on to the mining headwinds, that was 10 to 15 years. So what that says too is, so we're going to be there in 15 years. No, we're not. Other things are going to happen. Time is going to keep marching on. New ideas are going to keep happening. CCS efforts are going to evolve. We're going to be doing things differently, than we thought. Nuclear, we have 50 nuclear tech from the 50s and 60s. It's highly dense, and there are approaches to work out using nuclear better, differently, greener. Those approaches are going to emerge because nuclear is one of the most dense forms for electrification. It's low carbon, but it's got the waste issues. There are other approaches. There's thorium reactors. There's all sorts of things. I went to a presentation on thorium reactors like 20 years ago. It's still being talked about. It's going to happen. That's going to happen. I think India is like a player there. So the time scales matter. The other thing, fossil fuels, I mean, there's a 30-year, window ahead, at least. Right now, they're the most dense form, aside from nuclear, of energy. We have to work with what we have better, do more with what we have, and also use less. Innovators are going to be finding ways to use less, to recycle more. And I think that was a big takeaway from the EarthX conference. But it's ringing in all the halls of all these sectors. So if you have that kind of attention in all these sectors about decarbonizing or sustainability, whichever hat you want to put on, I like the sustainability hat. I don't like to just focus on decarbonization. I think it's all a bigger imperative than that. And there's a lot of investment themes connected to all of it, right? So it's a really exciting time in energy, sustainability with resources, and I just keep advancing my thinking about it and just being open and listening, because if you get married to one approach, if you're like, I'm not going to do fossil fuels, oh, I'm only going to do, a battery plug-in world, that's where I'm going, you're going to miss it, and you're going to put your money in the wrong place,
So how does this all translate into investments, into portfolios? It sounds like, I don't want to say diversify, but I mean, is that kind of, what kind of observations would you make that in terms of very particular investing in portfolio strategy?
Yeah. Well, okay. So specifically, with what I do, one, of course, I have positions in the majors, Exxon, Chevron, Pioneer because of the Permian story, Pioneer, PXD because of the dividends. Now we heard that they were a candidate of ExxonMobil's for acquisition, which is the bigger story of consolidation in the oil and gas industry because of the scale requirements in fossil fuels, but also because of the energy transition. And so because they're players, BP and Shell, we know that they broke out on the greener path early and they've had to revise because, Russia kind of pulled the rug out from underneath their feet. But it wasn't just Russia. Those cracks were shown in Germany before the Russian invasion. I've talked about that last fall. Those firms, like I said, are kind of a flight to safety in it. Now it's, interesting with what's happening in mining, you just have to kind of watch that. I've not focused on that. I know there are contributors and analysts there at Seeking Alpha that do that. Right now, I kind of like just tossing in an index, for my clean proxy, like iClean or something, have some position in that. I have some, carbon, KRBN, that sort of thing. I'm going to be looking at other things connected to other sectors in sustainability. I can't talk about it yet because I've got kind of like a rolling thesis I'm working on and I'm not ready for prime time. But it's part of my consultancy and advisory that I'm doing as well, with developing portfolios. But I'm real boots on the ground about it, and then the other thing I would say, because of this consolidation in oil and gas, is that the smaller firms that are going to get acquired in the future, identify those firms that have some competencies that align with some of these majors, if they have good acreage in the Permian or the Haynesville or like Denbury, they have all the EOR capabilities. Look for some of those firms that are doing well, that are probably going to get acquired, and that's one strategy. And I was kind of thinking about that. One name that was raised that was interesting with the Port of Corpus Christi is Talos. They're publicly traded offshore, doing things in partnership with the port. I don't have the specifics, but it just kind of spoke to the idea of vision. Who's having some vision about where things are going? Because one of the arguments was that, okay, we're very focused on shale, onshore shale production. Talos is offshore. We've been all about onshore shale, and there's a lot of that, and that's going to keep happening. But at some point, the tide's going to turn some, and it's there, offshore oil production. So, you can look at some of those firms as well and see who's doing well, who may be bought. There are other parts of the world, Latin America, Brazil, where there's also some good producers. So it's yes, the US is doing fantastic. We're just like, we're really in the money right now. But there are other places on the globe, we're exporting more. Like I said, that Port of Corpus Christi, 2.3 million barrels a day. It doesn't sound like a lot, but you get one outage in the oil market of 1 million barrels a day, that drives the price, you get all that volatility. The more oil and gas that are coming from the United States, that's a stable source of supply. We're stabilizing the market some, as much as we can. And those Asian buyers, this is something I heard, those Asian buyers like US oil. They're going to like US LNG, so that's kind of interesting because the barrels are cleaner. We're working on cleaner barrels. And I talked about that before, and on some of my commentaries on my site. That's kind of where it's going, decarbonizing, reducing the carbon intensity of US oil and gas, and others, but we're really leading the pack, I think, on that. We're very conscious of it. There's a lot of efforts being made about it, so that's also, so if you want to be in fossil fuels, but you're concerned about, decarbonization and net zero, well, then go to those players that have that type of focus. And there's a lot of them, a lot of them have made carbon pledges. I actually profiled some research on that. And it's also on my site somewhere. It's on LinkedIn, on my LinkedIn. So, and that was academic research. That's not me just pulling a bunch of stuff and making an article up. It's, research about them. And so that's also an investment idea, greening up your oil and gas portfolio.
So let's wrap this up. It's a big discussion. There's a lot going on. I think that one of my key takeaways, it's you said at the start, it's multi-generational. It's a big timeline for all of this.
Yeah.
So get the idea that it's multi-dimensional. It's multi-everything. Really, it's a lot to chew on. If there's a key takeaway for someone from all of this, what would that key takeaway be?
Be diverse in your energy investment portfolio. Be open. Don't get fixed on one concept or goal. Look at it that there are various pathways for sustainability, and that even what seems like the most obvious pathway may not be the solution and could get turned upside down on its head. So invest with, where we're at and how we're moving, because most of us aren't day trading with our retirement portfolios. You've got to have a horizon, but if you're investing in energy, you have to update your horizon ever so often. But like I said, there's longevity with oil and gas, the majors, that sort of thing, some of the big E&P firms. But as we know, some of these big E&P firms could well get acquired, in the next handful of years or less, likely less, because of the profitability, because of the balance sheets right now. So it's prime time, for that, I think, in my mind. So the big picture, diverse, openness, prudence, capital efficiency, resource efficiency, just think of those things when you're, placing a bet, and diversify your bets, and don't believe everything you hear in these announcements. It's a very political time, too, because we're going to have an election and all that's starting up, and so you have to look at it from a, real economy. Where's the real economy, and what is driving ambition and innovation, and what real innovation is happening, and how far along are we? Where's the science? Where's the geology of things? Can the earth sustain it? That sort of thing.
It takes a lot of digging. I mean, a lot of digging,
literally,
research and stuff. I mean, yeah, obviously, but a lot of research and a lot to think about. So
yeah.
Really great discussion. Again, I appreciate your time today. Thanks for discussing all this stuff.
Yeah, thanks for having me, Michael. Yeah.
All right, thanks.